Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here this morning. Today is the 22nd, Thursday, the 22nd of April, 2021. My internet's been out all morning. And so I decided to give myself a haircut with the buzz clippers. Gouge myself a little bit. Boy, it can happen so quick and easy when you're trying to do your hair yourself. But it's pretty good, you know. Now, in our province here in Nova Scotia, we have had an explosion in cases in the last 2 days. They've closed the borders to non-essential travel, it's just only for people who have to bring things in and stuff, you know. They have a little area of land. We're almost an island. Nova Scotia is. It's a little tiny narrow strip of land leads in and out of the province. And it's called the Tanamar Marshes. It's a very low area of land. That's why it's called a marsh, you know. And if it weren't for that Tanamar Marshes, we would be an island. And so they can check everybody coming in and out through that area, you know, that little narrow zone. That's why we didn't have much virus here for a long time. But now, boom, it's done it classically, exactly what you call it said. You get a few isolated cases, and then next thing you know, boom, and it just explodes. It's exploded here in the last couple of days. And so heavens knows what they might do. They might put us on, I don't know. I'm not going to say the lockdown word, you know. But anyway, listen. I'm staying in now. I did get a little bit. I got out. I got a new pair of hair clippers, and I was able to get out and have KFC a couple times when the virus levels was low and everything, you know. And I was able to go shopping a couple times and everything. I'm glad I took advantage of it. Anyway, things are going good though, pretty good, you know. But we got to watch out. I'm going to tell you guys what. I was watching the internet, watching YouTube, and there's so many of these guys on there who are saying we're going to get 70 to 90% crash coming. It's coming, you know, because they realize what's going on right now is unsustainable. And the Fed's even admitted that it's unsustainable, you know. They're right, you know, that's what would happen. Is we would get a 70-80% crash. It'd come along kind of suddenly. It'd be just like what happened to the stock market crash in 1929, and the system would deflate. But there's only one problem that stands here. The system cannot withstand that. It's so over-leveraged, and one company, all these big companies and stuff and corporations are all involved with the banking system, and the banks are all involved with one another. They've all tied themselves together with invisible threads or these networks. I know a way of explaining it to you guys. Picture that there's a big harbor, say, like it was like an enormous harbor, and all these ships are there. And one of the ships sinks. So the captain of one of the ships, he comes up with a great idea. Let's link all these ships together with chains, and that way none of us can sink anymore. You know? So they tie chains to all the ships. The only problem with this is, if one of the bigger ships sinks, then it carries all the other ships down. The chains will pull them down. See? And that's the way the banking system's done. They've linked themselves together with invisible chains. The derivatives and everything. And I'm going to tell you that they cannot withstand a major crash like 70, 80, 90%. Nothing can withstand it. Everything would sink. The entire system would sink and it would lock up. And, you know, that's why it's not going to happen. That's why they're going to keep pumping the money out there. They're going to keep bailing out companies. They're going to keep doing what they have been doing. Whatever it takes. It's like Draghi, Mario Draghi said, whatever it takes. They're going to print to infinity. And because of this printing to infinity mandate, we're not going to take the deflationary road. Because the system cannot withstand the deflationary road. we're going to see inflation. And the worse the system starts to crash, the more inflation that we're going to get. Anyway, listen, guys, let's get the charts open and take a look at what's going on. Let's start the charts right here, and let's take a look at what's going on with this. What we got is we got the gold price. We're going to check first. $17.80. It's down $12.90. Now we're going to take a look at silver. Silver's down 43 cents. You know what a buying opportunity for silver. I'll tell you why I like silver over cryptos. First big thing, you can't hold a Bitcoin in your hand. And that means a lot to me. The second thing is, like, the internet was out here all morning. What can I do with any Bitcoins or anything like that if the internet's down? You know? And so, there's just something old school about not cryptocurrencies, but the physical metals that I actually love. Cryptocurrencies, I know that they're probably going to be the next big thing at some point if the government doesn't crush them. But they're okay as a speculative investment, you know, as far as I'm concerned. And it's okay to dabble in them. It's okay to make some money with them if you're of that nature, you know, you want cryptocurrencies. And they might be the next big thing if the government I think they would if the government will not turn on them. But that's a big issue too with them, you know, is the fact that the government could turn on them. Physical silver. Gosh, I love the stuff. This is the thing. This is the place I see to protect your wealth through this turmoil that we got coming right now. 26.12 today. It's down 43 cents. So it's creating a buying opportunity. Cryptocurrency today, we're looking at 200 over 2 trillion in the industry. A Bitcoin price of 54,954. We're in the middle of the rally right now because we're seeing the Bitcoin strength compared to the other currencies. Bitcoin is strong, not so strong. It's weakening a little bit. That means that the money is moving into the altcoins, specifically Ethereum, which the price is at 26.19 now. Okay, let's take a look now at the Dow Jones Industrial Average. It's off 25 points today at 34,111. Let's take a look at crude oil. It's 16 cents up at 61.51. The move index, 62.27 and going along sideways. Bonds and rates, we're looking at rising yields today. 1.8 basis points in the U.S. 10-year is at 1.58. Now listen, watch the U.S. 10-year as it moves toward the end of this year. I expect it to move up slowly, very slowly, to about 2%. And it might even make as high as 2.25% by the end of the year. And this has got directly points toward the inflation that's in the system. We're at the starting gate for the inflation. You're going to see the inflation now, guys. You're going to start to see prices going up at the store. This is the acceleration phase we're starting to move into. And this acceleration phase could last for 6 months. It could last for 12 months. It could last 18 months. It's probably going to last for the next year at least, the acceleration phase. And during this period in time, we're going to see 1970s style inflation. We might get some sort of a deflationary shock that could make the inflation move faster, quicker, you know? And that's what I said, you know? I mean, these guys out there say 70 or 80% drop. We can't sustain that kind of a deflationary event. But we could sustain some sort of a 30%, 20 to 30% correction in the markets where at the end of it, the Fed would step in and stop it. But that would mean massive stimulus measures. Do not underestimate what the Fed can do, guys. Don't make that mistake. They can start new programs or whatever that you've never heard of before. Things you've never heard of before they can do. They've already told everybody out there, we have an unlimited printing press. And they mean it. Take them at their word. Okay, let's take a look now at the US dollar index. 91.31. And it's rising today. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.